Hi, this is Andy Hoffman, Marketing Director of Miles Franklin Precious Metals, in our 25th year in business. It's midday, Thursday, November 6th, and the title of this week's audio blog is The Silver Flashpoint. Well, my article on Tuesday was titled Too Much Horror to Focus on Just One Thing, and given the litany of ugly, ominous events the past week, from political to economic to financial, that same theme can be applied to this week's audio blog. Of course, since I had to name it after something, I chose the potentially major inflection point in the cartel war of the U.S. Mint selling out of silver amidst its highest ever demand. But more on that in a second, as I want to start with the past week's other events, starting with last week's Federal Reserve End of QE, or as I titled in my subsequent article, The End of QE LOL. As longtime readers know well, I am 1000% convinced the Fed doesn't care in the slightest about the economy, but instead the financial markets, so as to create a false impression that its policies are working. In other words, they are just as likely to sell treasuries, for instance, to prevent widespread realization of what I call the most damning proof yet of QE failure, i.e., plunging rates amidst a so called recovery, as they are to buy significantly more than they purport to prevent market and sentiment declines. As I proved last year in proof of the tapering mirage as regards Treasury securities, and none other than Eric Sprott did last week regarding mortgage backed securities. Then again, when China announces it's selling significant amounts of treasuries and Belgium mysteriously shows up to purchase them in quantities nearly as large as its entire GDP, it doesn't take rocket science to figure out what's going on. Or, for that matter, that we continue to see dead ringer and new Hail Mary algorithms in stocks and bonds respectively every single day at 10 o'clock a.m. when the open market operations the Fed utilized for QE were supposedly concluded. And thus, when the Fed purports to end QE, or anything for that matter, it is at best misleading and most likely lying. And don't forget for a second that it was only 2 weeks ago when the Dow Jones propaganda average catastrophically fell just 9%, when no less than 6 Fed governors called for a delay in the end of QE, per what I wrote in Manipulation, Jawboning, and Prayer. Now that the PPT has sufficiently goosed markets back up and smashed precious metals, they felt it appropriate to pretend they were ending QE, at least for now. But when Yellen said their decision was due to an improved labor market outlook, I nearly lost it. I mean, how blatant can propaganda be, particularly when published 6 days before the all important midterm elections? Recall, it was just 3 months ago when she said ZERP would remain for a considerable time due to a, quote, significant underutilization of labor resources. And since then, we've had a punk August NFP report, a September report purporting the lowest labor participation rate since 1978, and a slew of economic data and earnings, both domestic and international, depicting a dramatically declining global economy. Oh, they left the considerable time language in, and mark my words, said considerable time will be forever, particularly because the 3 death trends I wrote of this week are expanding exponentially. The first, collapsing oil prices, will cause massive economic and geopolitical shockwaves the world round. From Russia, where the ruble is literally collapsing as the Ukraine war coincidentally restarts, to the Middle East, where nearly all producers' spending budgets are underwater at current prices, to the US, where the devastating impact on the fraudulent, over-leveraged, heavily depleting shale oil boom will far exceed the piddling positive impact of a tiny percentage of household expenses modestly declining. The second is the monstrous currency volatility and destruction caused by Fed-led Western money printing. As I write, the average currency is down more than 30% since the Fed expanded its money printing orgy in mid 2001, and a whopping 40% against the fragile 5 nations where a quarter of the world's population reside. And last but not least, the aforementioned final currency war, which following the Bank of Japan and ECB announcements of the past week was escalated to DEFCON 1. As for the U.S. data itself, last week's comical GDP report, which beat expectations solely due to a nearly full percentage point of government defense spending financed by printed money to bomb ISIS, whilst personal consumption growth fell to its lowest level since last winter's polar vortex. And I won't even go into the typical overstatement adjustments and comically understated inflation deflator. And then you had this week's horrific trifecta of negative prints for the real data categories of durable goods, construction spending, and factory orders. Moreover, most island of lies data, i.e., the diffusion indices that even Wall Street mocks, declined. And in the case of the PMI manufacturing index, it would have been much worse if not for one of the most ridiculous seasonal adjustments ever, which took the year's worst hard data and magically transformed it into the best reading in 9 years. Not one day after the FOMC ended QE, Japan swooped in with its own kamikaze attack, in not only dramatically expanding Abenomics before it even ended, as I predicted it would in my August article Decision Time, but tripling the Bank of Japan's overt purchase of Japanese equities. Not only did this suicidal announcement utterly decimate the yen, whilst its inflation rate was already surging, but it prompted significant response as the final currency war dramatically escalated. That very day, the US had already warned Europe not to take its euro devaluation too far, and now the euro and dollar were rocketing higher against the yen as well. At today's ECB meeting, Draghi escalated the currency wars further in saying, quote, "The main message is ECB assets are set to expand as others contract, and asset-backed security buying is to begin shortly," which is exactly what the entire ECB board has been saying for the past 2 months, as has the Bank of Japan. I mean, just think about the ramifications of such a blatantly dovish ECB statement, which clearly was targeted specifically at the US dollar. Whatever it takes, Draghi is as hell-bent on destroying the euro as Shinzo Abe the yen, to the point he's even lying flat out. Clearly, the Fed's supposed end of QE doesn't involve contraction of its balance sheet, as Draghi implies, but instead a temporary cessation of overt expansion until the economy and/or markets experience their next crisis. And in the case of the US, crisis they will certainly have, as just the strong dollar alone is enough to torpedo the earnings of the multinationals responsible for the majority of the nation's profits. You don't believe me? Then read the press releases of Walmart, McDonald's, IBM, and Coca-Cola. As for the elections, all I have to say is this: big deal, as the Republican Senate majority will have not the slightest impact on broad government policy, and even less so on the sorry shape of the average American's finances or confidence. However, what decidedly will impact sentiment the world round is Sunday's Catalonia secession referendum, which, despite the corrupt Rajoy government deeming it unconstitutional, will let the entire world know what the citizens of a region yielding 25% of Spanish tax revenues intend to do. Most likely they will vote a resounding yes, and when they do, I assure you it won't be the end of this potentially Europe-destroying movement. And speaking of cataclysmic votes, the November 30th Save Our Swiss Gold referendum has the potential, once and for all, to not only upset the entire global fiat Ponzi scheme, but permanently destroy the gold and silver cartel itself. Since last week's news that initial polls had the yeses in the lead, the cartel has outdone themselves in their attempts to not only discredit gold, silver, and the mining industry — by the way, mining shares closed below their 2008 levels yesterday — but utterly destroy it. Why they have taken such cartel suicide this far is beyond me, but as I wrote this morning, today's level of hubris is nearly unparalleled in financial history. Not to mention the fact that they should probably be focusing at least as much on the euro as gold, as I assure you, the Swiss are watching today's plunge to 2-year lows as closely as they are watching the gold price. Remember, since the Swiss National Bank suicidally pegged the franc to the euro on September 6, 2011, coincidentally, the day gold prices peaked, the euro has plunged 16%, whilst the Swiss National Bank's balance sheet has nearly tripled in defending the peg. There's not a doubt in my mind a yes vote is the sum of all fears for the powers that be, which is why never have we seen such blatant paper raids in 15 years of cartel destruction. Fortunately, the cartel cannot manufacture physical metal, and thus their maniacal efforts have pushed prices so far below the cost of production, we have seen, unquestionably, the highest monthly gold and silver demand ever. Reports from around the world depict plunging inventories, as on the COMEX, the Shanghai Futures Exchange, and the GLD ETF, and literally exploding demand. In China, October buying has been as large as the entirety of global production, whilst Indian demand has surged, as no doubt Japanese buying has as well. And here in North America, the coup de grace occurred yesterday, when the U.S. Mint followed up its third largest ever month of Silver Eagle sales by selling out of silver just 2.5 days into November, after having sold more than half of the entire October output. Royal Canadian Mint figures are only published quarterly with a 2-month lag, so it is unclear exactly how much they sold. However, like the U.S. Mint, the RCM was already well ahead of last year's record pace, and here at Miles Franklin, both premiums and delivery times for Silver Eagles and Maples, as well as junk silver and other silver products, have significantly expanded this week. In both the gold and silver market, forward rates haven't been this backward dated in a decade, and the longer paper prices remain this low, the higher the odds the cartel is permanently blown out of the water, particularly if the Swiss make the right choice and elect to save Switzerland by voting yes. Well, that's enough for today. As we have noted ad nauseum, it is difficult to conclude anything other than that something extremely economically and financially wicked this way comes, perhaps catalyzed by Sunday's Catalonia secession vote, or the November 30th Swiss referendum, or a slew of other factors, political, geopolitical, economic, financial, or otherwise, that appear ripe to explode at any time. And when it, or they do, the ensuing global stagflation and unrest will likely be unprecedented. Thus, we cannot be more vehement in our belief that this may be your last chance at financial survival, and for those taking the initiative to protect yourselves with physical precious metals, we hope you'll call Miles Franklin at 800-822-8080 and give us a chance to earn your business. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thanks and have a great weekend.